The Reserve Bank and its Monetary Policy Committee have started their three-day meeting, even as we speak now. The market is unanimous that Reserve Bank won't change rates and nearly sure it won't change its stance as well. But the governor has been lately messaging through tough talk or an OMO threat or risk weights. So what do you expect on Friday? I have with me Neeraj, Gambhir, the Group Executive and Head Treasury Markets and Wholesale Banking Products at Axis Bank, and Santanu Sengupta, the Chief India Economist at Goldman Sachs. Gentlemen, thank you very much for your time. Shantanu, first to you. My colleague Ritu Singh's poll across bankers and economists, plus our own citizens, MPCs, say no change in policy. Almost unanimous, no change in that withdrawal of accommodation words either. So what will be the big messaging you will look for?
No, thanks, Latha. So we also are not any different from consensus or other market participants. There's a no change in the policy. We do not think the RBI lets their guard down either on liquidity or on the hawkish noise that we have been hearing in the recent past. And the reason we think is that, compared to their expectations, although the growth data has been mixed, ultimately on a headline basis, it's surprised on the upside. The internals are a little more mixed. Consumption has been weaker, investment has been stronger. But more importantly, from the inflation point of view, we think that there are multiple upside risks cropping up in the current 2 months of the quarter, that is November and December prints. We think it's going to be 6% or higher, and in the first half of the year as well, with these multiple food shocks coming up. And therefore, we think that the messaging from their side is going to remain on the hawkish side, including some tightness in liquidity and, of course, unchanged policy rates.
Okay. Similar question, Neeraj. Last time the governor surprised us by using the words OMO sales to indicate that he really means things to be tight. Will that be the overall message? Tighter than what the market expected?
So I do feel that the hawkishness in the policy will continue for quite some time. I think at least next few months, because as Shantanu mentioned, the headline inflation numbers in India are still going to look pretty high as compared to the RBI's target. And the fact that GDP growth is strong and the messaging around consumer credit and the change in the risk weights all point towards the fact that Reserve Bank seems to be getting a little bit concerned about, certain parts of the economy maybe growing too fast. So the stance is likely to continue to be one of withdrawal of accommodation. We do expect that the market will, the liquidity in the system will continue to remain tight, particularly in the month of December, as we see advanced tax outflows and as we see GST outflows happen. It is likely that the net systemic liquidity is likely, may sort of go towards about 2 to 3 lakh crore net deficit. And that will keep short-term money market rates elevated. And therefore, I think the messaging from Reserve Bank as well as the actual outcome on the liquidity side, at least for the next 1 month, doesn't seem to be indicating any kind of change in the stance or any change in the messaging itself.
Mm-hmm. Okay, Shantanu, the other important numbers that people will watch out for will be their inflation and growth forecasts. You expect any changes there?
So growth, I think there will be a little bit of a markup higher, but that is more given the Q2 numbers were higher than everybody's expectation. Also ours, as you remember, we were lower than consensus, and the numbers ultimately beat higher than consensus. On the next year's numbers, I mean, Latha, our view is that there'll be drags on growth, particularly from the fiscal side. India is still running a fairly high fiscal deficit, 8.5% to 9% of GDP if you include the state governments, and it has a large public debt, 82% plus of GDP, one of the highest in emerging markets. And we think that fiscal consolidation next year will stay the course. They want to get to 4.5% in 2 years' time, which means that the fiscal drag, along with the macroprudential tightening that the RBI has been doing, apart from the fact that liquidity has remained tight overall, will mean growth, in our view, is around 6.2, 6.3 in the next year. So this year, maybe a markup towards 6.6, 6.7, but next year we are at least in the handle of 6.2, 6.3 on growth. On inflation, we are above the RBI's and consensus estimates because of the food shocks mainly that I talked about earlier. It's not just vegetables, it's pulses. There's question marks on how the Rabi production will be. We'll have to see how the Kharif output is. There's sugar, there's spices. And the other important thing in our view is that core inflation, if you break it up into core goods and core services, core goods we think will turn around Q1 or early Q2 of calendar year next year. Because it follows the WPI manufacturing inflation cycle. WPI has bottomed out, and we think that'll start feeding into core goods inflation from Q1, Q2 of next year. All that means that core inflation for us is around 4.5, and therefore probably a little bit of upside risk to the RBI's inflation estimates as well.
They won't give us a full year GDP and inflation forecast for FY25, will they? That's, I think in the last policy, they gave us Q1 estimates for FY24. Full year won't come this time, will it?
No, likely not now. You'll have like 4 quarters ahead numbers coming through. I think the numbers you can look at from the MPR, which is the monetary policy report, which comes out twice a year. But we think that in the handle of around 6.5 is where probably they would be. But our point is that next year there'll be a drag on growth mainly from the fiscal side, as well as the tightening of monetary conditions.
Okay. Well, actually, the Reserve Bank now has 5.4% for 23-24. That is the current year inflation number. Neeraj, in case that's upped, will the market take it very badly? In the first place, are you expecting that they will up it? Because, the November-December inflation is expected to reach close to 6% because of vegetable inflation. So, do you see that number hike, the overall yearly number from 5.4? If that happens, how does the market react?
I don't expect that to be hiked. I think RBI will still stick to its forecasts. I don't expect a change in the forecast for FY24 inflation numbers. We'll have to see if they give, let's say, Q2 data, then what is the Q1 and Q2 of FY25 looks like in terms of growth and inflation. But I think, as Shantanu mentioned, that the core is tracking about 4.5%. So it's very hard to actually come up with a forecast which is looking very different from 4.5% that broadly is there, is sort of a consensus forecast on inflation for next year. The one thing on inflation that I want to point out is that if you look at the seasonally adjusted sequential core, services and manufacturing inflation or products inflation, it is tracking about 3%. So absolute core, or the core of the core, is actually at about 3%. It is the volatility on the food, it's the volatility on the energy prices and maybe gold and silver, which is causing, the headline inflation to look actually higher than what the underlying core is actually indicating. So India remains susceptible to these shocks, and therefore it is hard to project a headline number which is anything better than 4.5% for next year. And we'll have to see whether the underlying momentum slows down. And it has slowed down in some of the other parts of the world. For example, inflation in Europe has actually come significantly lower than what people expected, likewise in US. So if that sort of catches here as well, then maybe the market's view changes. But currently, I think 4.5% for next year is what the baseline is.
Okay, let me come to the OMO threat, which the governor wielded, but brandished, but nothing was done. Well, for those of you who are not bond market or fond of bond markets, OMO is open market operation. We were expecting the Reserve Bank would sell bonds. So, Neeraj, last time the governor probably announced that, and that was at least my interpretation, because US yields were at 4.8, crude was higher, and so the interest rate differential had to be kept up. The governor probably wanted the interbank call rate to go to 6.75 and not trade at the repo rate of 6.5. But now those threats have diminished. So what will he say about OMO? Will he allow the call rate to come towards 6.5?
Well, first of all, the OMO as a policy tool is always available to Reserve Bank, whether the governor announces it or not, right? I think what the market got worried about is that it was explicitly called out in the policy And the fact that it was explicitly called out in the policy was considered as some kind of, giving it a bit of a hawkish sort of sentiment in that sense. In my mind, the use of OMOs will be subject to how the liquidity conditions play out through the next year. We have a bit of a challenge in terms of funding the balance, the overall current account deficit. FDI flows have actually been quite weak, and we are becoming more dependent on FPI flows. So under these conditions, if the FDI flows don't pick up into the next year post-elections, and what we continue to see somewhere close to some current levels of FPI flows, then the need to do OMOs to sterilize FX intervention will probably be far lesser. So to my mind, I think OMO actual usage will be dependent upon the liquidity conditions in the market. But whether Reserve Bank will continue to use that threat to ensure that the market doesn't run ahead of itself and the bond yields don't rally too much, creating some kind of a financial conditions easing, I think that's something which is what the market will really watch out for.
Yeah, brandishing the same threat again will not have the same effect. It will be very clear that, okay, you may say so, but you will do it, you may or may not really implement it. Actually, similar question to you, Santanu. The global peace appears more clement now. Will that allow the Reserve Bank to let the call rate go towards 6.5?
No, undoubtedly, the global piece is looking better. You mentioned both US yields are lower, oil is lower from where they were at the last policy meeting. But given the more domestic threats on inflation, that really hasn't changed from last policy to now. And if anything, growth has basically surprised you on the higher side. I think the objective will be to keep the overnight rate somewhere in the region of 650, 675, rather than let it hit the MSF on a continuous basis, because that might mean significant tightening of financial conditions if liquidity really remains that tight for that long. And you have spillovers into ultimately deposit rates for banks, CP rates, working capital financing for corporates, and so on. So you don't really want that kind of tightening to go through, but somewhere in the region of 650, 675 is where you want to keep the call rate. And the other thing to remember is that if you sort of think about it medium term, that core inflation for India is at around 4.5. The RBI really hasn't hiked that much for them to feel comfortable about liquidity, right? So you're at only 6.5. Your dollar rates are still at 5.25, 5.5. Albeit the market pricing in now Fed rate cuts later in the year. So until that pricing really comes through in the global markets, and there's significant direction from the Fed on the timing of the easing cycle, you would want to keep domestic banking system liquidity slightly tighter, and the call rate within that MSF repo corridor, rather than let it fall to repo or maybe lower.
Okay, fair point. Actually, from what both of you are saying, it looks like it will be a cut paste of October policy, with the governor sounding somewhat hawkish. But the last two policies, the governor is always surprised. We go with the consensus, but it's somehow a little different, a little tighter. So I would watch, and I have this feeling that the press conference is going to be hijacked by those risk weights, even if he doesn't announce anymore. So we will always get something to headline. Let's wait and see. Thank you very much, Neeraj, Gambhir and Santanu, for outlining what we should expect as a base case from the Reserve Bank. Wrap up on Bazaar, Chartbusters update.